Wise shares have shed 27% since mid-April, falling below £8, while the underlying business has never been stronger. The Brussels Prosecutor's Office says it is finalizing a direct criminal summons against Wise's European operations over approximately €500 million in suspicious transactions. That is the surface event. The paradox sits one layer below. Wise has told the BBC it has not received any specific findings from the investigation. Two irreconcilable statements about the same legal proceeding are now both on record, and the share price is resolving the conflict for the market before the facts arrive. Strip out the legal risk and the numbers are compelling. For the year to 31 March 2025, Wise reported underlying income of $1.4 billion, up 19% year-on-year. Free cash flow reached $615 million, up from $487 million the prior year. Corporate cash on the balance sheet stood at $1.43 billion. At below £8, the forward price-to-earnings ratio has compressed to around 20 times, pricing in a meaningful probability of an adverse outcome. Whether that probability is correctly calibrated is the question the market cannot answer today, because the prosecutor and the company disagree on whether a substantial proceeding even exists. The bottleneck is not the criminal investigation in isolation. It is what happens the moment the Brussels prosecutor files the summons. The office has told AFP it will pass its findings to the National Bank of Belgium simultaneously with any criminal referral. The National Bank licenses and supervises Wise's European operations. A criminal summons without a concurrent license review might be survivable. A summons that triggers a National Bank supervisory response is a different category of risk. A direct summons is not an accusation in the investigative sense. It is the step immediately before criminal court. In Belgian criminal procedure, a direct summons is issued when the prosecutor has concluded that the evidence is sufficient to bypass the instruction phase and send the case straight to a trial chamber. The Brussels office told AFP on 16 June that the Wise investigation is nearing its conclusion. Not that it is ongoing, but that the conclusion has already been reached and the summons document is being prepared. The underlying pattern matters more than the headline figure. The probe grew from Wise's repeated appearance across hundreds of separate criminal files in Belgium, involving alleged drug trafficking, fraud, and corruption. This is not a single compliance failure attributed to one incident. It is a structural footprint. Wise accounts appearing systematically across a broad range of criminal matters tracked by Belgian authorities over an extended period. That pattern is precisely what a national bank regulator reads as a supervisory concern, regardless of what a criminal court ultimately decides. Wise's defense rests on its compliance architecture. Roughly a third of its staff is dedicated to financial crime prevention. The company verifies customers before onboarding, monitors hundreds of data points in real time, and proactively reports suspicious activity to law enforcement. The statement to the BBC that no specific findings have been shared is consistent with this. Wise is cooperating. But the statement also reveals a buried assumption. Wise's compliance claims are evaluated against its own reporting standards and its own threshold for what constitutes adequate controls. The Brussels prosecutor's threshold for what constitutes a structural failure may be different. Those two thresholds have not been compared publicly because no specific findings have crossed the channel between the two parties. The consensus is treating the Belgian probe as a binary. Either the direct summons materializes and the license is threatened, or the probe concludes without criminal action and shares recover to their April levels. That framing omits the most likely intermediate path, a supervisory action by the National Bank of Belgium that falls short of license revocation but imposes capital requirements, operational restrictions, or a formal remediation program on Wise's European entity. Wise's European license is the infrastructure underneath the company's entire growth thesis. The B2B segment, representing under 1% of small business international payment market share, is the next volume layer. EU-licensed cross-border payment infrastructure is the only route to that market. A supervisory restriction on new enhanced due diligence client onboarding in Belgium similar to the restriction Rathbones has just voluntarily adopted in the UK under FCA pressure, would not close Wise down. It would reduce addressable volume in the segment the market is assigning a terminal growth multiple to. The hidden assumption is this: analysts pricing Wise at 20 times forward earnings are implicitly assuming the European license remains fully operational throughout any regulatory process. The prosecutor's own timeline, findings to the National Bank simultaneously with the criminal referral, means that assumption will be tested within weeks, not months. The market has moved 27% on the headline. It has not yet repriced the European growth trajectory for a scenario in which operating conditions are partially constrained for 12 to 24 months. Those are two different calculations, and the current share price may be conflating them. The prosecutor's summons is the first fork. A direct summons filed to a Belgian criminal court is a public document. It will arrive with specific counts and named entities. At that moment, the ambiguity collapses in one of two directions. Either the summons covers Wise's European licensed subsidiary, or it is directed at named individuals within the operation. The former triggers the National Bank review. The latter may not. Neither Wise nor the market knows which of these it is facing, because no specific findings have been shared with the company. The National Bank of Belgium's response is the second and more consequential fork. Criminal proceedings in Belgium can take years before a trial chamber rules. A supervisory review by the National Bank can move in weeks. If the National Bank issues interim measures, a capital add-on, a freeze on new license extensions, or an operational restriction, that is the event that reprices European growth, not the criminal court outcome. The share price below £8 reflects some probability of the second fork. It has not yet priced the specific shape of what restricted EU operations look like for a business whose entire volume growth narrative runs through cross-border payments. The counter case is specific and grounded in the pool. Wise's Q3 FY 2025 filing with the London Stock Exchange continued to project underlying income growth of 15% to 20% for the full year, with European operations named as the declared focus. If the summons ultimately names individuals rather than the licensed entity, the National Bank review may not be triggered at all, and the 27% discount would represent a pricing error on a business with $615 million in free cash flow and structural underpenetration in B2B. That reading holds only if the summons, once filed, leaves the European licensed subsidiary unnamed. For the holder, the monitoring variable is a single item: whether the National Bank of Belgium announces any interim supervisory measure in the window between the summons and any criminal trial date. For the watcher considering entry at below £8, the confirmation trigger is the summons itself, specifically whether the licensed European subsidiary is named as a defendant. The FCF floor and the 5% market share ceiling in personal transfers argue for re-entry if the entity is not named. Both positions converge on the same document, which the Brussels prosecutor says is nearly ready. Every day after the close, we publish a market wrap and key issue analysis. Subscribe to the channel.